Crypto just dropped 5%. Bitcoin pulled back, Ethereum followed, altcoins bled red. But why? Was it just profit-taking? Did Congress fumble the ball again? Or is something deeper happening in the blockchain economy? Today we're breaking down the exact mechanisms behind the recent crypto correction, what the data actually says, and why, if you know what to look for, this might be one of the best buying opportunities of the quarter. Let's dig in. First, the market snapshot. Bitcoin fell from nearly $123,000 to about $117,000 in less than 24 hours. Ethereum dropped from $3,048 to around $3,680. Solana and Avalanche saw over 6% drops. Dogecoin down nearly 8%. This wasn't isolated. It was a synchronized risk-off movement across the entire asset class. Now, why did this happen? There are three main drivers. Number one, profit-taking at the top. Bitcoin had been rallying for weeks, with RSI, that's Relative Strength Index, pushing over 78. That's deep in overbought territory. When that happens, high-leverage traders and institutions start trimming. That's just smart capital preservation. If you overlay Bollinger Bands, you'll see price action moving outside the upper band, then snapping back toward the mean. That's textbook mean reversion. Number two, political risk. Last week was supposed to be the big crypto moment in Washington. A series of bills like the FIT21 and the Stablecoin Clarity Act were on the calendar. Instead, they got delayed. Again. That kind of policy indecision adds friction to capital flows. And institutions, especially ones managing ETF products, hate friction. They backed off. Markets responded. Number three, liquidation cascades. Open interest in BTC futures hit a local high. When support at $119,000 cracked, automated liquidations kicked in. Long positions started getting wiped. That triggered more stop losses, more liquidations, classic feedback loop. In 1 hour, over $350 million in leveraged long positions were force liquidated. And when that happens, the sell pressure multiplies. So, was this a random dump? No. It was a logical consequence of technical exhaustion, political disappointment, and leverage overextension. Let's go a level deeper. From a technical standpoint, Bitcoin is currently sitting right on top of the 0.382 Fibonacci retracement from its latest impulse wave. That's historically the first major support zone in bull cycles. Below that, the 100-day exponential moving average, that's sitting around $113,000. Bitcoin hasn't closed below it in over 2 months. That's your next line in the sand. Now for the nerd metrics, on-chain data. Exchange reserves continue to drop. That means more people are pulling Bitcoin off exchanges and into cold storage. Bullish. Miner outflows? Neutral. No panic selling from the source. Whale wallets, defined as those holding over 1,000 BTC, increased by over 2% in the last 48 hours. That's accumulation, not distribution. The realized HODL ratio, which measures the age-weighted spending behavior of holders, is still aligned with early-stage bull market behavior. What does that tell us? The blockchain isn't worried. This wasn't a loss of fundamental trust. It was a trader-driven reset. Let's not forget macro. Inflation came in lower than expected, CPI at 2.4%. That lowers the probability of another Fed rate hike. Lower rates mean cheaper capital, which favors risk-on assets like crypto. At the same time, the US dollar index, DXY, is weakening. That inverse correlation, still intact. Dollar falls, Bitcoin rises. It's still a hedge. So what's next? If Bitcoin holds the 115-116K zone, we consolidate and likely retest 123K within a few weeks. That's scenario A. Scenario B? We drop to 104K if macro or policy hits another roadblock. That becomes a massive buy zone, not a panic zone. Here's how smart money plays it. Set laddered limit orders below support zones. Watch volume profiles. Use this range to DCA with precision, not emotion. If you're in this for the long haul, this isn't a time to fear dips. This is where the real gains are made, in how you respond to the red candles, not the green ones. Markets don't move in straight lines. They breathe. And right now, crypto's taking a deep breath. Where do you think Bitcoin goes from here? Drop your predictions in the comments and subscribe if you want more no-hype, data-driven crypto breakdowns every week. Thanks for watching, and stay tuned for more great content brought to you by the Silicon Syndicate. And as always, please like and subscribe to keep the channel running. Thank you so very much for taking the time out of your busy day to watch my videos.